This is Alan Farley from FX Empire. Dow component Walt Disney reports earnings next Wednesday. Taking a look back, the stock topped out right around the 120 level in 2015. Had this long consolidation pattern, finally completing a cup and handle pattern, breaking out with the announcement of Disney Plus in April of 2019. The stock topped out around the 155, 157 level in November 2019, failed this breakout during the pandemic, came back up, and it took, let's see, from November 2019 to December 2020, more than a year to get back to this prior high, finally breaking out in the fourth quarter of 2020. Well, the rally only lasted for about 2 or 3 months. The stock topped out above 200, posting an all-time high, built this topping pattern right here, and then you could see this bearish island reversal. We have a gap here and a gap here. The stock entering a very ugly downtrend in November of 2021. Well, it's lost ground since that time. As you can see, the 50-day moving average became resistance right here in September 2021. And we have a test here, failure, test here, failure, test here, test here, test here. That moving average keeps moving down. It's right down to about 130 right now, which is where major resistance lies. Now we are getting down to the 786 retracement at 104 plus psychological support at 100. So I presume there's going to be a rally here pretty soon, trying to gather back some of that strength. And again, if it gets much higher, it's going to run into this brick wall right at this blue line. Now, if you take a look down here at accumulation is really ugly. Disney pays no dividend, and it's dropped back now, accumulation to the level first struck in February 2014 when the stock was trading in the 70s. Now we do have, see that test here from 2019, and then in 2021 where it came back up, and then we started this distribution wave, which really accelerated right here in November. Now Disney has shot itself in the foot with movies that haven't been quite as popular. It's also got involved in sort of social justice issues, which is practically ensuring that half of its customer base is angry at them, just the way with divided partisan politics. So it's a very dangerous position to be in. We really have some good tests coming up with the with Marvel movies this year. We'll see if the brand has lost its luster. But to be honest, movies have not been what Disney's traded on in years. It trades on its Disney streaming service. It also trades on the economy and the COVID reopenings and how well its parks are doing. As we know, some places are doing well, like here in the U.S., but other places, like in Shanghai, remain closed and remained under pressure.